And then we will also talk and just have an open-ended question and answer. So if you guys have any questions or anything like that, we'll get to those in a little bit. But just kind of dive into my SPY analysis for a bit. One sec. Okay. All right. So we ended up, let's just kind of break it down a little bit. We ended up coming down to 390 last week. We defended it very, very well. And what happened was, if you see here, this area used to be a resistance when we broke through it back in July. And then we went all the way to 430, which is a psychological whole number. And then we came all the way down at 388.50. But anyway, so this resistance now became a support, and the bulls were very, very defensive over this area. Then we had a nice rally, ended up forming kind of a little pennant, kind of a bearish pennant. And we gapped down significantly yesterday over in the overnight session due to the CPI numbers not being the best. So we gapped down significantly. So we actually created an imbalance into the market right here. So for people that are unaware, imbalances usually like to get filled. There is no time horizon, however. It could take a day, it could take 2 years, it could take 3 days, we don't really know. Prime example, right back down here, this area beforehand was an area of demand. So it's kind of the same thing. It's also an imbalance. Just to prove the point, this was back from March 2020, so almost 2 years ago. Well, actually, it is 2 years ago. So that's what I mean. Like these imbalances have zero time horizon. They fill when they fill. So we have an upside gap. So that's something that needs to be aware of. So that's 408.50 is a profit target. And then we also have a downside gap as well at 383. And then we have another thing right here, actually. Another one right there. So I believe this is on the 10-hour. I would have to double check, but there is a gap here, and now there's another gap right there. So we use gaps as profit targets. So what that means is, so these little bit heavier levels like that, comparatively to that, these are monthly levels. So if we end up breaking below 388, which has been defended very, very well, if we break below that and we break below this demand area, so these zones of buyers, then we would go down to the next monthly level, which is 386. And if that does not hold, we go down to a psychological whole number of 385. Psychological whole numbers matter tremendously in the stock market. The stock market is made out of two things: human psychology and supply and demand. Like that is the stock market. So if our psychological whole numbers does not hold, then we have the first major target will be this gap fill. And then the secondary major target will be this gap fill, which would be a pretty decent decline. That's about 4%. That's a pretty decent decline. I think what's going to happen though, I believe we're going to possibly have some sort of a continuation tomorrow. We held 391 very well. We had a market buyback at the end of the day. So the market makers ended up having a buyback because they were more short float. So they were heavy short float. Therefore, they ended up needing to buy back. Usually on green days, just kind of a quick tip, usually on green days, the float for market makers is usually short, because you have to remember, for every transaction, for every one volume, there must be a buyer, there must be a seller, right? So if everyone, like in this case, if everyone's buying, and no sellers are stepping up, the market maker must step up as a seller in order to keep the equilibrium, in order to keep the balance, right? So in that case, they're stepping up and they're just getting all of this, all that, all the inventory, right? And so they're acting short because everyone's long. So, and then what happens is they then have to buy back that inventory just to kind of become equal again, because ideally they want to be zero at the end of the day. They want to get rid of all of the inventory. Right? So they want to go back to zero and restart tomorrow and be fresh. So this is just a prime example of a market buyback. Now, during consolidation periods, it can be a little bit harder to identify what type of inventory. Are they short or are they long? So in this case, they were long for sure. Like literally because it's a directional day. So when it's directionally down, they're long because they have to do the opposite, right? Because no one's bullish right here. Like literally no one is bullish. Therefore, the market makers must be bullish because they have to keep the equilibrium. They have to supply the liquidity. But yeah, that kind of got off topic there, but that's just market makers. They provide, um, their sole functionality is to provide liquidity and to become, and basically to step up and be the participant. So like if there's tons of buyers and no sellers, then they have to act as a seller in the transaction. If there's tons of sellers and no buyers participants, therefore they need to act as a buyer in the transaction. So buybacks don't always happen. No, not at all. Especially during like choppy days, it's very hard to tell. It could be like it could go either way, because during the chop, they're able to unload the inventory during the choppy stuff. But yeah, and so another just to kind of get on that. Another thing, a lot of like newer traders, for whatever reason, like they think the market makers are like out to get them in a sense, right? They're like out to get them and all that type of stuff. But in reality, the market makers don't give a singular shit about you. Like your 5 contracts, your 15 contracts, whatever the case may be, they don't care, right? What they care about is providing liquidity. Like that is their sole functionality, is to provide liquidity. They have no bias. They don't care about calls. They don't care about bullish, bearish, any of that type of stuff. All they're doing, it's basically an algorithm. It's a computer pretty much. So they have no bias. It's just all it wants to do is provide liquidity, find where all the liquidity is at, drag price down, pick it up, or drag price up and pick it up and reverse. So like down here, there was liquidity because this was a 10-hour demand zone from the other day. This is a 10-hour demand zone. We came right into the demand zone. If you're not aware what demand zone is, it is a zone of buyers. It's an imbalance of buy orders left sitting there, right? So we actually came into it 3 separate times, 1 time, 2 times, 3 times. So that zone is no longer there anymore because it was from over here. But now this is actually a fresh zone. We actually made a fresh 1 hour today. So this is the levels you want to be caring about tomorrow. Is if we end up coming down to 393 or 391, there's a good possibility that the price action can come into it and bounce out. Right? Then I'm not saying that's going to happen, because just because it's a demand zone does not mean it's going to hold. Right? It can easily pierce through it. So just kind of keep that aware. Just because it's a zone doesn't mean it's going to reverse. And for a supply doesn't mean it's going to bounce for a demand. It could easily pierce right through. So just kind of keep that aware. But yeah, this is just kind of our levels for tomorrow and the rest of the week. Is we have a little bit of an area of where resistance can set. So safer entries would be over 397. And then if we get over 397, we get to this little box. So this is a monthly level, 398. And then we have the top side of the supply. So there could be some sort of area right here where people are willing to step up and act as a seller. because it's a supply zone. There's sell orders waiting to get filled here. Then here's a couple other levels. This is very obvious, $400. $400 is a very, very large target. It's a massive psychological whole number. It will get defended. So definitely if you are in calls for whatever reason still, you definitely want to be taking a good bit of profits here, because I can tell you it will be defended. Just like this 390 region was defended very well. Like psychological whole numbers really matter. So definitely don't sleep on that. If we end up breaking above 400, we have another supply zone. It's a light supply zone, so it's not like, too major. And then we do have that big ass gap to fill. So that would be like, big, big, big target. But then that's kind of like the shorter term target, maybe possibly tomorrow, possibly Friday. We don't really know. But if we end up failing to break over this 397, then we're coming back down to here. That's a monthly area. And then we have a demand zone that doesn't get picked up. We already have our next levels: 390, 388.50, 385. Let's just call it 386. Gap down, gap down. So these are the levels, like the big levels that we actually care about over the next, week or two. Because we didn't really do too much today until like kind of like the only thing that we really had was, I mean, I guess we had a couple different opportunities. We had one right here and we had a decent one right there. But other than that, like middle of the day was pretty choppy, which makes sense because we did just have that massive down directional day. So it makes sense that we had kind of more of a, sideways day for most of the day. That's like kind of what I put in my pre-market analysis this morning. The likelihood, like historically, the likelihood of another down day after this significant down day was extraordinarily unlikely. So that's why I made it very apparent to say that, because some people in here have that false narrative of saying, oh shit, the world's ending type of thing, time to buy puts immediately at open. And that's why I made it apparent so you guys don't do that. Because if you did that, you would have got shit on right at the open for the first 30 minutes. Now you could have taken this to the downside, sure. But if you ended up taking puts like the first 5-10 minutes, I tried to warn you, honestly. But you just have to look at the historical data. Within this last year, whenever we get these type of moves, the probability of it actually continuing the next day is extraordinarily low. So this makes sense why we pretty much just kind of chopped in a range all day, right? We were just in a little bit of a range from about $5 range. This makes perfect sense. So we either break above this blue box and go up here, we reject off this blue box and go somewhere down here. That's pretty much the short-term stuff. Can you explain the gap again? Yeah, sure. One sec. So I forget where I found it on this one. Let me double check. 10-hour maybe, just to showcase exactly where it is. Here it is, 5-hour. So if you look here, you see this little gap right there. So that's an imbalance in the market. Therefore, the market does not like imbalances, and it will get filled. Like I said, it can take a day, could take a week, could take a month, could take a year. We do not know. All we really care about is identifying and marking that on our chart just for our future reference point. All right. So that's all we really necessarily care about, is this gap right there. Actually, let me make it pretty. There we go. There we go. And then the other one's on the daily. Right here. Big old gap. So these are just targets for longer term. I doubt they'll happen this week, maybe next week. Who really knows? The market can do anything. We don't really know for sure. But yeah, that's just kind of my, my short-term analysis over the next couple days. Just so it can help you out. If you want my levels or anything, here it is. Possibly screenshot or something like that. But there they are. Let me read some questions here. The one question was about the market makers. Why didn't that happen the day of CPI data come out? We just kept dropping at the end of the day because they were not short. There's two different things that can happen. During this day, their float was short. Therefore, they had to buy it back. This day, remember, they're doing the opposite. Their float is long, and they have to sell it off into the last hour and a half of the day. Right here, that's the sell-off. Remember, there's two different things that can happen. They either have to buy back their shit because they were short, or they have to sell their stuff because they were long. Very important. $20-minute supply zone. Sure, I got you. Right here. Drop, base, drop. I have an entire video about supply and demand on my YouTube. I have a couple actually. I'm not going to go over all that. It's like at least an hour's worth, and I'm not going over all that. But if you're honestly not familiar with supply and demand, there you go. This is an hour long. It will help you tremendously. So I'll link my YouTube in a bit, but yeah, I'm not going to go over how I do supply and demand. Are you more bullish or bearish short term? I don't care. I'll play whatever side. I don't have a bias. What are your levels for NVIDIA? I actually haven't really looked at NVIDIA for a bit. Just to be nice, I'll do it real quick for you. Let's go on the quarterly. There is the big upside and downside. So we're in a range right there. Go to the 2 month. Nope. 1 month. Nope. Weekly. 3 touches. 2 touch area. 3 touch area. And then 132 is a psychological whole number. So then we go down to the 4 hour. That actually looks pretty good going into tomorrow. If we can break above this high, like right here, like right there, that high, that would actually be pretty good for calls, possibly. I'm actually going to put an alert there because I haven't been trading the video, but this looks decent. So thank you for bringing that to my attention. Yeah. Oh my, is there any news or something after hours? Maybe I'll look more into that later. It might be some flow analysis, but anyway, if it can break above this little high, then we can continue up there, like right there. Yesterday's, well, technically today's pre-market high, then right there, then right there. If we fail to break above, then we would come back down to this 1 hour demand zone right there. So there's a drop, base, rally, and then there is the demand zone right there. So those are your levels. These are all strong levels. So we have 134.6, 133.5, 132.7, 132. Pretty much 130. 130 is definitely going to be something. It's a psychological whole number. And then we have a demand zone. Hope that helps. Do you trade the open or wait a bit? I usually wait like 15 minutes. Yeah, honestly, I trade open on specific stocks. Like for example, today I traded open on Oxy when I called it out. I forget exact. Yeah, I took it like the first 5 minutes, like somewhere off the bottom here. Let me look exactly. Yeah, right off this bottom, like right off this candle is when I entered, like right here. So this is an example of where I did enter in the first 5 minutes. But if you're talking like immediately out of the open, like the first minute, I never do that. It's extremely risky because anything can happen. There can be tons of volatility. It's not your fit. It's not in your best interest. So I would recommend at least waiting 5 minutes. Like that's bare minimum, honestly. Usually, personally, I like to wait like 15 minutes. It really just depends on the specific stock I'm trading. Like if I'm trading oil, I know historically oil usually moves right out of the gate, and I don't want to be, missing that in a sense. So I'm pretty much maybe not necessarily obligated, but like if I don't want to miss the move, I have to change my game plan around a little bit. And in this case, I traded the first 5 minutes and it worked out pretty well, right? But most times I usually wait 15 minutes. Good question. I'm not sure why people ask me these broad questions. Here, let's reiterate this. When job claims come out tomorrow, where do you see the market going with numbers coming? I don't know. The numbers have not came out yet. I even if the job like here's another cool thing. Even if the numbers are good, like let's pretend the numbers are quote unquote good. The market could still tank like shit. Even if the numbers are quote unquote bad, the market can still rally to shit, right? Don't care about the numbers, care about how it's reacting. Like like news and numbers mean very like insignificantly. It's how the actual chart is looking. Um, yeah, honestly, that I get asked that a lot. Like I don't really know. I can't predict the future. I just play what's given to me. And you should do the same. How does analysis for QQQ look like? Probably exactly the same. Literally exactly the same because QQQ and SPY are pretty much hand in hand. Which time frame am I looking at open? Good question. Usually the 3 to the 5 minute. Just I'm on the smaller, probably like anywhere from the 2 to the 5 minute. I'm on usually the smaller time frame for sure. And then once we get a little bit more data, maybe like 15, 30 minutes in, then I kind of move to like the 5 minute just to see possible confirmations for entries and exits. Moving averages, I am using the 300-day and 200-day exponential moving average. I'm also using the VWAP. I don't really use too many indicators. Will this video be recorded? Sure, I got you. Do you have any videos on your YouTube for beginners? Yes, I do. What is the easiest way to spot a fake out? Oh, yeah, that's a good question. So here, one sec. Uh, Here we go. Right here. So this is a liquidity grab. This is a euphoric candle right here. Probably trapped out a lot of people this morning. Uh, People thought it was calls. And what happened was it was actually a liquidity grab. It was a euphoric candle. And you have to realize timestamps matter. Like you want to wait to see if the candle actually holds a level or if it gets immediately rejected. In this case, at one point in time, this body was way up here. So the bulls had the price way up here, but it didn't form yet. It was still in the process of forming. Therefore, you always want to be looking at the timestamp, depending on whatever you are entering and or exiting. So if your confirmation is a 2 minute, you are specifically waiting 2 minutes, 2 entire minutes, because within those 2 minutes, even if it's like, let's say for example, you're at 1 minute and 15 seconds and it looks super good, right? But 45 seconds later, it actually forms and it's completely reversing on you. Therefore, wait the full candle close and judge how it looks then. You care about the plotting. The plotting is important. Like we needed this area to hold and we needed to plot above it. That is considered a bullish confirmation, a bullish continuation. If we plot it right neutral, like right next to it, that's not really anything. We would have to wait another candle to see how it looks. If we plot below, like in this manner, that's bearish. So the the time you enter and the plotting is extraordinarily crucial. So that will help you to not get faked out as nearly as much. Hope that helps. Mhm. Where did I go on vacation? I went to Iceland. Appreciate you. Do I use the tape? Yes, I do. I use tape and I use level twos. What are my rules? My trading checklist. Good question. I like to see if there's volume. There has to be volume. Preferably, the volume is stepping up. I want to see for me personally, I like to trade off of these indicators really well. I like to trade off of possible bounces or rejections off of one of these indicators. I'd love to see that. That's definitely a very good confirmation for me. And it really depends on the overall context. Is it a bullish day, a bearish day? If it's a bullish day, I need to see some sort of higher high and higher low. If it's a bearish day, I need to see some sort of lower high, lower low. So, I mean, it really depends on the overall context of the day, but pretty much general rule of thumb is you need to have volume. The price action needs to look good. So like you need to have at least 3 confirmations in my opinion. Like if you're like, talking to yourself and you only see one thing, like one specific scenario in your mind, it's like, okay, there's one confirmation. That's not good enough. You need to have multiple convictions to actually justify you getting into a trade. And you also need to have specific areas of where your targets will be and where your stop loss will be before entering a trade. You need to do this in a level-headedness, because if you do not have your pre-assigned targets and your stop loss already, mapped out, you don't do that before the trade, you're going to get emotionally invested when you're inside the trade. And all you guys in here know it, myself included. Let's pretend my stop loss probably should have been this, but I didn't account, I didn't map that out before my trade. So now the price action is coming down, coming down, coming down. So I'm like, maybe I'll just move it down here. Maybe I'll just move it down here. And then sooner or later, you're now down 60% because you had hopium waiting for a bounce. So like that's why you're getting emotionally invested at that point. You want to make your targets and your stop loss, you want to map that out before entering a trade. Extraordinarily important. My settings for VWAP are default. Go off the reaction to the news and don't try to anticipate the news. Exactly. How come you don't give out signals like Brett and Kev? I've given out multiple signals this week. Don't know what you're saying. So are you thinking SPY is dumping tomorrow? I've answered that probably 10 times. I don't know. Sorry, I don't know. We'll find out in the morning. Best trade I've ever had. That's a good one. I'm not sure percent wise. I think it was like, that's a good question. I think like 400% or something. I think it was off of Caterpillar. Yeah. I think it was like 400% off Caterpillar. I caught the entire move. It was pretty cool. Oh, name of the volume in here. Yeah, I got you here. It's called buy, sell, volume totals. This is for TradingView. There's also a Thinkorswim version, but it's more privatized. So if you want it, feel free to just message me personally and I'll happily send you the script. How do you select when to swing a trade versus the day trade? I mean, that's a good question. That's a broad question. All right, so swing trade, you must have a lot of time expiration on your side. Therefore, if you decide to swing something, you're not swinging a weekly. You're swinging a monthly. And if you're not comfortable doing that, then you're not swing trading. Like period. You need to have expiration on your side or your contract's going to get crunched because anything can happen overnight. Like for example, if you decide to swing, let's pretend you tried to swing calls for whatever reason overnight, you would have got absolutely obliterated because of this gap down, right? Anything can happen overnight. This gap down significantly. So if you want to swing, that's perfectly cool. Just buy expiration. You need to have the wiggle room in case something happens. If you had a 1 week expiration there, your contract would have opened literally 99% stop loss. You would have lost everything. What's my usual stop loss percentage on swings? 40 to 50%, 40% on short-term swings, 50% on long-term swings. You prefer 1 minute for entries? Absolutely not. 1 minute is not reliable whatsoever. I would prefer 2 minutes, at least 2 minutes for confirmation. I have no idea how to trade. Can I DM you on Discord for help? Sure, always happy to help people. Welcome to your trading journey, by the way. It's gonna be a fun one. How do you trade oil? Honestly, trading oil is pretty much an open drive play. So like today's a kind of a good example. Um, the move happens relatively pretty quickly, and then after the move happens, it pretty much flutters out. So like oil, if you don't hit it the first like hour in a sense, you missed it. Don't chase oil ever after the first hour. Sometimes it can continue higher, but the probability is just not there. So like oil is definitely a morning based trade. That and I usually only enter calls. I don't really enter shorts for it at all, simply because of the economic status with oil and everything like that. I don't look for puts whatsoever. I just look for only calls. What are your settings again for EMAs? 200 and 300. Default settings. Do you buy out of the money or in the money options? I buy in the money and or at the money. I rarely buy out of the money. If I do, it's like one strike out. So it's really not that far out. That's actually a very good question you brought up. This is another question I get asked very, very often. What percentage are your trims or take profit? Like, what do I take profit at percentage wise? I don't care. You guys are gonna be like, what do you mean you don't care? I don't give a shit. Like I said before, I have my levels already pre-assigned. Like my targets are already pre-assigned. If my price action gets to that target, I'm cutting. Maybe not cutting, I'm trimming. So that could be fucking 6%. It could be 12%. It could be 30%. I don't care. I do not look at my percentages during the trade. I look at it after the trade when I'm reviewing, and you should do the same. People are so worried about P&L and percentages and stuff. Yes, it matters absolutely, but why are you caring about that during the trade? You're not caring about the thing that actually matters: the chart, the volume, the price action, all this other stuff. Like I get asked that all the time. I do not have a set in stone percentage I trim at. I trim at my targets and I look how I look what I made afterwards. Or if I lost, I look how much I lost afterwards. But yeah, that was a good question you brought up. Best time frame for day trade, 15 minutes or so. Here's all my time frames I use. I don't use just the default. I use a ton of other time frames. I like to flip around a lot. Yeah, I honestly like to flip around quite a lot. So if you want to take a look at that, yeah. How do you know how to watch Oxy for today? That was a good question because of the rising volume, like right before the open. We had like rising volume right out of the open, and Oxy also had rising volume like immediately right out of the open. So that's usually a pretty good sign because, like I said before, Oxy happens like mainly all oil stocks happen like within the first 5 minutes, first 10 minutes. So if you're late to the game, you would have to get in on a pullback. You don't want to be chasing. A couple people asked my YouTube here. Let me drop it for you real quick. There is my YouTube channel. I have tons of cool videos on here. So if you ever want to come check it out, I have tons of interesting videos. So have fun. Where can you find information on different sectors? Kill that solar, Enfis, you alerted. Yeah, absolutely. Glad you took that and you got some money. That's awesome. Take a screenshot of this. This is all the ETFs. All right, so this is pretty much everything that you should care about and you should look at on either a daily or a weekly basis. Like this is how I make my newsletter every week. I look through every single one of these sectors because this is the, materials, energy, it's financial, you get the point, industrial, tech, all that. And I kind of just see which one looks good, which one looks the best. And then I Google, hey, what are the top holdings of XYZ? Spits out a couple top holdings. I look to see that. Then I just kind of go from there. Be like, okay, wow, it looks like these are the top 3 holdings. Therefore, I'm gonna look at that because they have the highest weight. And then yeah, you just kind of go from there. Hope that helps. When did I start trading? Good question. How long is it again? It's been two 2.5 years. Yeah, about 2.5 years. I started pretty much during like the Corona lows. Like yeah, about 2.5 years. I used to be a nurse before that. So I got out of nursing at a very fantastic time. Uh a lot of people have been asking me for my Instagram. But I don't use Instagram. I mean, you're welcome to follow me. I'm gonna be honest. I don't really post on it, but you're more than welcome to follow me and chat. Um, there it is. Because I've had like 10 people ask me about it so far tonight. What else we have? How do you get your nickname? I don't know. I just like to refer to myself as a scrub because technically speaking, I am. All right. If you compare, me to like a 10-year veteran or like a 20-year veteran, like you have so much to learn. Like everyone has so much to learn. Um, yeah, like it's kind of like a humbling experience. Like, yeah, sure, I'm doing decent, but like I know that there's so much more to learn. And that's the fun part. Like it's overwhelming for sure sometimes, but at the same time, it's like fun challenge. Just because like if you learn something new every single day about the finance and the stock world, you still would be learning in 10 years. Like it's that vast. Like it's very, very, very vast. And that's the cool part about it. How old am I? I'm 26. Do I use the heat map? Yes. Yeah, I used to be a nurse. It was not my cup of tea, let's just say that. When did I start going full time? A year, almost a year and a half ago, give or take, somewhere around that. So it took me about a year-ish to get to the full-time status. So yeah, honestly, if you're struggling or something like that, my first honest, like just to be transparent, my first like 6 to 8 months of trading, I blew probably 10 accounts. Like I had absolutely no goddamn idea what the hell I was doing. And then I was like, because I'm the type of person that's extremely stubborn. And the first 6 months, I was like, nah, screw this, because people would tell me, yo, bro, you should just probably just, get some sort of education, et cetera, et cetera. I'm like, no, 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 no. I'll do this myself. Right. And that was like kind of the ego complex. And then I just kept blowing account after account after account. And then finally, after I just lost a good bit of money, I was like, all right, let me put my ego to a side. And I ended up investing in education. And thankfully it expedited my journey. It really accelerated my journey. And that was pretty much how I was able to become full-time trader like 6 months later. Um, yeah. So if you're on the fence about that type of stuff, honestly, I would try to like vet people for sure because sometimes unfortunately people can be kind of like quote unquote fake gurus. But if you align yourself with the correct person, then you will thank yourself down the road. So if you're struggling right now and whatever I'm saying is resonating to you, just trust me, it's not worth it to just do it by yourself. It, you want to learn from someone that has struggled already, that have known exactly what the hell that you're going through. And this way they can kind of steer you away. Be like, bro, I've already done this 10 times. Learn from me. Don't do this. Instead, do this. Right. So that's actually a very good point you brought up. That's something I recommend to anyone, even if you're month 1 of trading. Like I highly recommend that. That's something that I'm very, very advocate for. Because it took me a long time to really, you know, set my ego aside for sure. It was a hard pill to swallow, but honestly, I wish I got education sooner because I'd probably, obviously everything's in hindsight, but if I got education like month 1, bro, all I gotta say is I would be a lot further than I am right now. So, just kind of, keep that in the back of your head. What else we have here? Why do you use two names on Telegram? I do not. I have one name on Telegram. So if you're getting other people messaging you, maybe saying some sketchy shit, that is not me. I only have one username on Telegram, and it's called Scrub Trader. How do you find sector rotations before they happen? I actually have a list of seasonality. So basically a seasonality of stocks and when they generally like to rotate into and out of. I can send you that document. Just message me personally. I got you. Uh, one sec. Recording will be on my YouTube. I'll probably post tonight or tomorrow. Hold on, I'm still reading. Oh, okay. Thanks. I appreciate your interest. I want to ask about mentorships. Yes, I do offer mentorships. Um, Currently, I do not offer solos. I'm pretty packed for like 3 months, so I am ended up doing a group session. I decided to do a group session. Very, very thankful, by the way, for the overwhelming amount of support. So I'll probably end up doing a group session maybe towards the end of the month if you guys are ever interested. Uh, be a very small group, probably like 5, maybe 10 people. I really don't want to have a big group whatsoever. We'll have a jolly fun time and I'll teach you everything I know. So if that sounds interesting, just hit me up. Always happy to help. But thank you for that. I appreciate the support. Any books that you helped and read that was oh books. Honestly, I'm gonna be super transparent. The only book that I read that was trading related was The Daily Trading Coach by Brett Steinberger, excuse me. Other books I read that I feel like truthfully has much more benefits is psychological books and like meditation books and all that. Because if you think about it, charting and technical analysis is like 30%. Like it's really not that much of trading. What actually is trading is mastering your mind, the psychology, the meditation, like the deep breathing, staying cool under a stressful situation. That is what matters. So I would recommend focusing more on psychology and meditation and all of that type of books and like, bettering yourself in a sense instead of trading books. I'm not saying trading books aren't useful by any means, but I personally just didn't really read very many. I felt like the psychology aspect was far, far more important. So that was a good question. Yeah. I'm gonna answer probably like 5 more questions or so, then and then I'm gonna head out for the night. So whatever else you got, just keep them coming. How did you start working for Kevin? I joined TCX when I first started trading, pretty much, one of those targeted ads. And I guess I just kind of worked my way up the rung. I was posting, analysis for a while. He took notice of it, messaged me. It was like, yo, you want to spot trial? I'm like, sure, I'll love the opportunity. Ended up, acing the trial. Brett and I got in touch, and now I work for the Boiler Room. So I work with them. Thanks for the question. What are your thoughts on position sizing and also your thoughts on the market? I not going to answer the market one because we don't know and anything could happen. Position sizing, though, I will definitely address. Position sizing is very important. So I'm just going to be transparent. A lot of you people in here probably size up too aggressively, too quickly. So sometimes people see a 5-day winning streak and they get very cocky and very arrogant. What happens is they start sizing up heavier and heavier, thinking they're just going to keep getting W's and W's and W's, right? Usually you blow your account. Does that resonate with you? You get over cocky, you oversize, and you blow your account, right? So there's a correct way of sizing and there's an incorrect way of sizing. You need to like The rule of thumb I have is if someone asks me, hey, bro, should I size up? I'm like, yeah, absolutely. How consistent are you? Oh, I've been consistent for 4 days. Bro, you're not ready to size up. You come back to me in 1 month later, you show me an entire 4 or 5 weeks of consistency with most of it green and very little losses, because obviously losses will happen. But if your losses are relatively tight, relatively like small losses, yes, you were ready to size up. If you're coming back to me a month later and you're still showing extreme inconsistency, you, sir, are not ready to size up. And that's okay. But that's just something you have to work on. So slow and steady wins the race. Don't think about the money. The money will come. You need to worry about the process. You need to worry about the fundamentals and the consistencies, because so many people are trying to sprint. This is not a sprinter's journey. This is a marathon, right? Because like, yeah, sure, let's pretend. I'll give you a real life example. My mom buddy, he went, I think I've told the story, but I'll tell it one more time real quick. My one buddy, he went from 5K account to 1 million in 6 weeks. Just fathom that. 5K to 1 million in 6 weeks by full porting everything, every singular trade, full port every time. And it worked until it didn't. Long story short, he lost $900,000 within 1 week because he kept doing the exact same thing, full porting, right? Just because you blow up and you get a lot of money, if you still have no idea what the hell you're doing, you will lose it. Therefore, slow and steady. And then going back to that example, he ended up losing $950,000. Yes, sure, he still got a $45,000 profit, but he was so greedy, he didn't secure any of that money that he got. So don't think about the money. Think about the consistency. The money will come. This job, trading, once you get this down, the salary is endless. Like, it's not far-fetched to make 5K a day. It's not far-fetched to make 50K a day, right? You'll get there, right? But like, stop trying to sprint at it. You need to understand what you're doing first. You need to understand how the market works. You're not going to get your 5K days until you actually know what the hell is going on. Hope that helps. I have the 200-day, 300-day moving average, and the VWAP. Market tuition is expensive as fuck. I disagree. I disagree. Like, even if you drop, let's pretend we're on the kind of the higher spectrum. $5,000. You're paying $5,000. Now, this is on the higher spectrum, by the way. Usually it's not that expensive, but let's pretend 5K. You're paying $5,000 to unlock a skill set that once you understand what you're doing, you can make that back very quickly. Example, when I first started trading, I blew probably like 10K. I invested in some courses and a mentor. And in 3 months, I made that 10K back because I knew what I was doing. So don't think about the upfront costs. It might seem deterring at first, but it's worth it and you'll make your money back. It really don't care about that type of thing. And now if it's like 10, 20K, etc., yeah, you're getting ripped off. But if it's under 5K and it's, if it's worth it, I would recommend it because people get in debt over much sillier things. They buy some fancy ass $50,000 car. They buy some $100,000 college degree, and they're over here like, oh, this guy's mentorship's like 2K. I can't afford this. Like, fuck off. You can afford it. Like, stop eating out for 2 months. You'll afford it. You know what I mean? Like, get your priorities straight, and you're good to go. So, I'm just saying, that's me personally. I mean, everyone's different, but if you truly care about trading, if you truly think you want to do this, then you'll find the money for tuition. I'm going to answer one more question, then I'm going to be finished. Hold on, let me just read a couple. Do you think there's a main key reason and way to become consistently profitable as opposed to inconsistent? That's a good question. Journal, review trade, journal, review trade, journal, review trade. If you don't journal, if you don't review, you're not going to get better. You have to study, and then study some more. If you don't do that, you're not going to get better. Did you have any psychology factors and how did you get over it? Yeah, I've had every single psychology factor you can think of. I've had greed, I've had self-hatred, I've had fear, I've had arrogance, I've pretty much everything there is, I've had it. It's like I said, it's human nature to have greed, but you also have to kind of snap yourself back to reality and be like, wow, bro, I just made $100 in 2 minutes. Like, you just have to be grateful and not be, you just have to realize that you're on your ass clicking buttons, making money, and anyone else in a 9 to 5 would kill to do that, would absolutely kill to do that. So just kind of think about them and put yourself in those shoes. Uh, if you were to relearn trading and do everything, your entire journey again, what would you do differently? Education from month one, journal and review trades much more often, and not project my emotions onto others. That is actually a very, very serious thing I want to talk about real quick. So sometimes, myself included, when I would lose a trade, I would be extremely upset or I would be extremely angry for days. Days. Not hours, not minutes, days. And it would be so bad that I would subconsciously project onto my loved ones. And it cost me a very dear relationship because I was subconsciously projecting my emotions onto someone else. And they were just trying to support me, but I was over here being, emotional in a sense to them and possibly just rude subconsciously. And I didn't realize it until it was too late. And you have to realize these losses that you're taking is no one's fault besides your own. They didn't click the buttons. They didn't enter a position. They didn't exit a position. That loss is yours. That loss is not your mom's. It's not your wife's. It's not your husband's. It is yours. Take it, sit with it, 10, 20, 30 minutes, an hour, however long it takes, 1 hour maximum. Be like, okay, why did I lose this trade? All right, what the hell is going on? Why am I emotional? Figure it out, and then you're done. That's it. Don't let that seep in until tomorrow. Don't let it seep in 4 days from now. Don't go and have an argument with your wife or something because you're pissy because you just lost $1,000. You're done after 1 hour. That is the most time you should ever think about a trade because it's in the past. You're not able to fix it. Even though you want to be like, fuck, I just lost $10,000. Yes, you lost $10,000. Now figure out what to do next time to not do the same thing, right? Don't be emotional for longer than 1 hour. That is something I wish and I really regret that I did not do. So if I could start everything over, that's what I would do. Not be emotional, not project onto my loved ones because I pushed away a lot of people that were just trying to help me. So if that resonates with you, if you feel like you're doing that, that is a reality check and that is a wake up call for you. One more question. I'm done. Hold on, I'm just still reading everything. What is my best year? I don't know. Probably yes, last year, I guess. What kind of car do I drive? I'm not materialistic whatsoever. Honestly, the fanciest thing I'm going to purchase for myself is going to be a small private airplane. And that's going to be next year. Other than that, I don't buy fancy things. Like I've had the same clothes for like 4 years. I really don't care about materialism. But to answer your question, I drive a Volkswagen Jetta. People are asking about mentorship stuff. If you want to talk about mentorship stuff, just feel free to message me personally. Here, I'll drop my information. We could talk about it. It's going to be a group session, probably like 5 to 10 people. It will start towards the end of the month. It'll be night sessions, most likely about 30-hour duration. And we'll do market recaps every week as well. This is the important part, the market recaps. So we're going to do sessions like, like educational sessions, pretty much like A to Z. And then we're going to do market recaps either on a Friday or a Saturday, which is very important because you're getting firsthand like real experience of what the hell happened on this market this week. So I feel like that's extremely valuable. So if you're interested, there's my information. Just message me privately and we can chat about it. The spots are extremely limited. Like I said, 10 people maximum, and my last class filled up extremely fast. So if you're truly interested, please do not hesitate and just message me quickly. But anyway, appreciate you guys for listening. Thanks for coming the last minute. Hope you guys learned some cool stuff. I'll post this recording a little bit later if you want to check it out. Enjoy the rest of your night, and I'll see you guys tomorrow. Toodaloo. Here's my information again if you want to check it out. First one's Discord, the second one's Telegram. Good night, guys.